So I'm going to kind of shift gears away from some of the technical gaps that we have toward getting from here to there, and just really kind of give a pretty high-level overview of just the challenges in commercializing the technology. So I think this is kind of starting to transition the overall discussion of this session from out of the technical into the really pure commercial issues. If it was easy, someone else could do it. I could almost just sit down. So I guess the first thing I want to get at here is, we need to define where we're going with this. When we say we're trying to commercialize floating wind turbines, so first of all, what is that? What does it mean to be commercial? And as I pointed out earlier, how many do we need, right? So I think part of our collective job over this summit is first of all to define what commercialization is. And so we're basically trying to get from a bunch of concepts, 40 concepts that are kicking around TRL 5, and 3 or 4 concepts that are kicking around TRL 7 through 8, and get up to commercial readiness index up in 4, which is where you're doing multiple commercial projects. And basically I would say that a floating foundation is commercial when it delivers a recurring profit stream. So if you can make a profit selling one small floating foundation a year for several years, I mean, in a sense, that's commercialized, right? And so just kind of thinking about, we really need to have a handle on what commercialization means and where all this is going. So having spent a lot of time thinking about this, and my poor wife hears about it all the time. God bless her. Yes, honey, tell me more about, I can't sleep. Tell me more about commercializing floating wind turbines. Okay, it's straightforward. In my view, please challenge me on this. Please add to this. Let's kick this around. I'm throwing out there. I'm putting this up here for you all to throw darts at. There are 4 barriers. One is the sheer magnitude of this challenge is really almost unmatched. Probably the only thing that's more difficult is introducing a game-changing technology into the automotive industry. I mean, this is a really hard thing to do, and I think we need to get our heads around exactly how hard is it. Well, let's unpack that a little bit. There's, at a fundamental level, I think there's a mismatch between where the innovation horsepower is and where the corporate staying power is. Little Gloucester, which is a big, strong, powerful company, and Marine Innovation and Technology, which is even smaller. God bless them, but I mean, is that the entity that can go the distance? I think we know that it's going to take more than that. I think we need to give a real hard look, collectively and objectively, at whether we are solving somebody's problem or whether we're nice to have. And finally, the last one is it's really hard making this an investable venture and finding that very special investor. So let's talk about kind of sizing of the challenge. Those 4, I'm just going to unpack those 4 sort of quickly here. So with the commercialization milestones, we're kind of going on the example set by essentially two trailblazers. The Japanese projects are all government funded, and that's a pure technology development program. It's not really a commercialization program yet. So we've got what Principal Power is doing. You guys are doing great, and Statoil is just like maybe just a little bit further down the road. And so one day somebody sits down, they make a go decision. Are we doing this or what? Yep. Okay, we're doing it. Clock starts. Somebody's got to start spending money, right? Because you're doing stuff and you're not getting paid, so the clock starts. So we hustle and we hustle and we try to get to a megawatt scale demonstrator. If it's 2 megawatts or 6 megawatts or something in between, fine. History has taught us that takes around 5 years, and even when you get a power offtake to go with that, there's still a sort of $100 million gap to get there. Someone's got to come up with $100 million, whether it's $25 million of grant, $25 million of increased power prices, some debt equity, maybe a corporate investor saying, I'll put $20 million into this for a piece of that action. There's a big gap to close here, and that's only the first step. And then we've got a 5-unit pilot project, and that takes, now we're at T equals 8 to 10 years. I mean, we're a damn decade into this, right? And we're still not getting paid. Okay, and we've got to go to somebody and say, by the way, can I have $400 million to do my pilot project? And if you add up the value of a rock, today's value of a rock in Scotland, which is 43.7 pounds per megawatt hour, and multiply that by all the power that Statoil High Wind will produce in its time, it adds up to something very close to $400 million. Then we need to go up and do a 200 megawatt scale. Our first project, remember I said I offered that commercialization was a recurring profit stream, not just a one and done. So the first profit stream that we'll really see, the first instance when a floating foundation generates a profit stream, is the core enabling part of that. Is more than a decade into the venture, and that project still, that first scale, that you're approaching $1 billion worth of extra kind of gravy on top of your power purchase agreement, and then from there we do more multiple utility scale projects. And so just to really look at that, to get one concept to that phase, we're talking about $1 billion, go something approaching $1 billion. And meanwhile, you've got a burn rate. You've got a crack team of experts and really high-powered people sweating it, working nights and weekends, doing everything they can. But even with that, you're at a burn rate of $1.5 million to $2 million a year for your salaries and your G&A and your IP lawyers and your R&D, and so that's just basically your shoestring budget with outsourcing. And then when you get into phase 2 after your demonstrator, and you ramp up and you've got maybe 20 to 30 people working on this venture, you've got a $5 to $8 million a year burn rate, and you're bringing more things internally. I don't know, does that sound about right? You're scaling up people, bringing things internally, right? And all this time, remember, we're not even pre-profit, we're pre-revenue, right? So this is a huge lift, and so. The total operational spend is laid out here, and so I'm just kind of putting this all out there that in case we were not fully aware of this, holy crap, this is a really, really hard thing to do. So I don't have all the solutions, but let's lay the problems on the table and talk about how to fix it tomorrow. Okay, so next, right, we'll solve it tomorrow. Okay? Yeah. I'm trying to just be, I guess I really intend to be candid about this. As you all know, I have a ton of passion for this. I want to see this succeed. I'm not telling you all this to say, okay, it's too hard, everybody go home. I'm not saying that. I'm saying if it was easy, someone else could do it, right? So who should be driving this? Well, as we've heard, there's a lot of logic. A lot of us are engineers, technical people, and so we think in a logical world. And logically, it seems like, well, come on, Alston, let's go. Why aren't you doing this? Well, I need to ask them. They say, well, you know what? We already have a $1 billion R&D program going on. I'd like to sell a couple of those first, get my money back, and then maybe I'll do one. And then say, okay, well, so they have their reasons for. There's logic for them doing it. There's good reasons why they won't. And then, well, so what will they do? Well, we'll sell you a turbine. And if you pay us a little extra, we'll provide the critical engineering that you need. Okay, well, that's better than just not even participating, but it's not going to get us there, right? So the developers, come on, Peter, you lead this. You're a developer. You're going to have all the gain. If you succeed in doing this, you're going to grow. You're going to corner the market. You're going to own floating wind. And he says that's a great idea, but you know what? I've really got a lot of risk on my plate already by developing a wind farm, and to take on technology risk, it's too much. And so what we're finding from developers is, well, we'll do the development work, the site development work, and the permitting. We'll do that stuff if you sort of pay us, like Res would kind of give you that kind of an answer. And okay, well that's good. At least they're not saying no, but still they're not driving the ship. Government, okay, God bless Japan. They're doing it. They want energy security. They've got some serious issues, and so. But in the U.S. and European governments, there's public aid restrictions that would simply tie their hands. Even if they wanted to, they couldn't because of state aid restrictions. And so what they are willing to do is chip in various ways, and it's helpful, and we want to sort of get as much of that corralled as we can. But again, that's not the one driving the ship here. Private equity, go to your favorite private equity firm, your T. Boone Pickens. Come on, you look at the world. If you buy this and you own the solution, you're going to kill it. You're going to make so much money. You're going to own this technology. You're going to make huge profits. But they all say the timeline's too long. Your private equity can't tolerate a 15 years without revenue or profit. And so what are they willing to do? I would say basically at this point, very little. They might top off the last 10 or 20% of your demonstration project with 15% debt finance. Oh, thanks. Yeah, I can put it on my credit card for that, And then the energy majors. Boy, there's a lot of logic in that too. And so Statoil is a good instance. They're leading this. But frankly, I mean, we know that Hywind was funded by sort of windfall money from the government, and they gave it to Statoil and said, do something good with this, and they built Hywind, and I commend them for that's great. But I don't think anyone in the board of Statoil sat down one day and said, what I think we should do is spend $70 million on a floating wind turbine demonstrator. because it was only by having that external funding infused. And so basically then there's others. I mean, I suppose ExxonMobil would be a good example. They're simply outright just not interested. No, we're a fossil fuel company, no thanks. And then the energy companies I think that are more progressive, they're just not convinced yet. They're still saying, that maybe that's my bet, or maybe solar is my bet. And so what they're willing to do, sort of at best, is study the opportunity. Please keep me informed. So who does that leave?
I disagree with you.
Okay.
In Europe, when talking with developers, there's a chicken and egg problem, because if they would see a market, a round of future development where floating wind work, they will be more than happy to support technology to achieve that. And that was driven the optimization of the monopiles or the jackets or whatever. This round 3 future German sites and future Danish sites. So if there's a willingness from the government and the developers to say, look, those sites where floating wind would make sense work, then is when they start to talk about that. And they are the ones that then will need a floating wind platform to put their turbines on top and get the power out of that.
You said a very important word, which takes me right into my next topic, need. Yes, that's good. I think that's good, yeah. And so, but yeah, as it stands, the developers are not willing to lead this. But I think if there was some different circumstances, or if we could sort of show them that market, then I think that could change, and we could start having a conversation about how are the developers going to lead this, rather not whether they would, right? And that's great. I want to be challenged on this. I welcome this, right? So I think the thing I put on the table is basically let's have a real honest conversation with ourselves as a group pushing a technology. Does anybody need us, or are we sort of nice to have? And then sort of, everybody wants it until they have to pay for it, right? And so Japan, I'm safe to say they need it. They've got some serious energy problems. This is not nice to have. They need it, and look what's happening. The government has spending hundreds of millions of dollars. Maine, France, Scotland, 3 places that are as governments are taking a lot of proactive steps to help us along here. I think it's kind of still falls into the nice to have category. Hawaii, based on the fact that they passed 100% RPS, somebody show me a plan that gets to 100% renewables in Hawaii without floating offshore wind. I would say based on that very forward-thinking legislation, we have a need. Okay, California probably needs. Maybe it's a slam dunk. I don't know. Well, you're the expert on that. We can kick this around, but we're approaching a real need here based on that RPS. Of course, the RPS goes away. Different conversation. Now let's think about some other places, just to sort of get out of the box a little. What's a place like the Virgin Islands? Arguably, they probably need it. They have a goal for 30% renewables by 2030. I'm not sure they can meet that goal with the existing tools, solutions, solar PV and whatnot. So maybe that's a probably needs it. It merits further investigation. And certainly there are island nations where I think you could say, if you're tired of paying 50 cents per kilowatt hour or for your electricity, or if you're tired of spending a third of your paycheck on electricity, let's talk about something that could maybe bring your costs down and give you energy security. So I think this is a core thing that we really need to be. I'd like for this just to be on the table. Finally, being investable and finding an investor. Anybody who's gone down this road, this is tough. So here's what private equity wants. I'm going to go down the kind of list of people that might sort of invest in this. Private equity. So this is your angel investors, your venture capital. What do they want? They want to scale up something that you can show them works as a business model. They don't want to scale up a technology from 20 kW to 6 megawatt. They want to scale up a functioning business model, right? So they at least want to see revenue, if not a profit stream. And you go to them and say, I've taken as far as I can, but I can't go to the market and offer multiple 6 megawatt turbines because no one will buy it from me. I can't back that kind of an order. And the private equity comes in and says, I'll backstop you. That's great, because you've got a customer, you've got a working model. I'll backstop you so you can grow the business. They also want their money back in 5 years, and really more like 3 years. They want to see some exit strategies where they can sort of just sell their interest and get out. And they want X returns, not percentage, so X being multipliers. Let's not talk about a 20% return. Let's talk about a 20X return. Okay, so that's tough. I don't know that we can provide that. A strategic investor, these are companies that are going to make investments that ultimately kind of grow. What they want to do, they want to invest in something to grow their business. So if you're Maersk Shipping, and if I'm Maersk Shipping and I see a concept that requires a specialized vessel in order to work, I might be interested. I might invest in that vessel, and then I can see how that grows my core business, which is providing vessels and services. Okay, so this is what they want to do. But what you ask them what they want to share the risk. They want to see at least 2 or 3 other investors at the table putting money in the pot. They want to see you putting money in the pot, and they want to see sort of frequent small victories. They don't want to see you swing for the fence and strike out. They say, let's just get something in. Let's build a little one. Let's do another one. So they say we like to celebrate small victories. And then finally, they want to have some kind of cost recovery. They don't necessarily need a return as they go, but they don't want to get too deep into the hole. So they want to at least see some cost recovery. And I think they're much more likely to invest in a specific project than they are into the operations of the company, which, as you recall from a couple slides ago, is on the order of $5 to $30 million need. Okay, so I think I presented 4 primary barriers, but now I'm going to cross off barriers and say, I want to leave with, these are kind of rhetorical questions. These are for us to think about. I don't necessarily have the answers. If I had the answers to these, I'd be off, commercializing my technology. Okay, so the magnitude of the challenge. So I guess we should ask, are we making this harder for ourselves than it needs to be, and are we aiming for the right milestones? It's a heavy lift to go from a model test to a 6 megawatt demonstrator to a 5-unit pilot project at these big scales. And so, is there another way? I think it maybe, I don't know, maybe there is, maybe there's not, but we sure are making this hard on ourselves. We're defining our own road here, our own milestones. So the first thing to say is, are they the right milestones, and have we just simply made this too hard for ourselves? Okay? What do we do about this mismatch? And I think the thing is, how do we get the big players to play? I mean, we've got to figure out a way to bring the OEMs and the major shipping companies and the people with the corporate staying power. I think we need to figure out a way to get them, give them what they need and get them to play. In the need versus nice to have. So, is this approach, is the general approach of commercializing in the target markets, is that the right thing to do, or do we need to be going off to Pacific Islands and doing demonstrators all over the place and then bringing that technology back home after we've driven the cost down and learned a thing or two? And we have a great value proposition for the end game, for a gigawatt. Just about anybody here can show you, I think, a defensible analysis that shows how it will be great at a gigawatt scale. But how can we make it great for somebody at 1 unit, at 5 units, and in between? We have to provide value along the journey, or I think that's one of the major barriers. And then finally, are there things we can do to compress the timeline for investors? Can we come up with different milestones that allows an early investor to get in and then get out? And are there ways we can spread the risk around? And then finally, who in the hell has the appetite for this? We have to figure that out. I mean, there must be somebody, but we've got to find that. And so I'll leave you with that. I hope this provokes some thoughts. I hope it makes you uncomfortable, because I think we need to get a little uncomfortable here in order to move forward. So thanks very much. I went 2 minutes past my time.